What's going on, guys? Bexio, and today we got a video on plug power because today it just popped and had a great day on some pretty positive news for plug and the company or the space in general. Hydrogen just moving forward and things looking a little bit brighter for the future of hydrogen in general. But plug will be a pretty big beneficiary from a hydrogen economy as they are obviously building out their infrastructure now for hydrogen in the future, and they'll be able to dominate the marketplace, which is a good thing. And we can see the big news here, right here on General Electric, right here. This is why General Electric, Plug Power, and Bloom Energy stocks all popped today. And it's pretty simple. There was a pilot. So right here, yesterday, GE announced it won a $12 million in funding for 2 pilot projects from the U.S. Department of Energy, in which the company will develop and test key components required for high hydrogen combustion using 100% hydrogen fuel stream to generate electricity. So, first off, $12 million, not that much. We can all agree it's not that much. Plug did like 600 million in revenue almost in their last year or quarters. They did very good in revenue. So 12 million of that, not a lot. 12 million of what GE does, definitely not a lot. So it's not that much money, but it shows that there are steps in place here that are moving towards a hydrogen economy. Maybe getting the bar over there and seeing how it'll go. And if it goes well, then we could be really off to the races with things really looking good. So it's a good start to the entire hydrogen economy stuff and going to hydrogen energy. And that's shown right here where it says clearly $12 million worth of contracts is not enough to move the needle at General Electric, which brought in more than $74 billion in revenue last year. For that matter, a $12 million news item wouldn't even be a huge deal for Bloom, which is nearly $1 billion in business last year, or for Plug either, which had revenue of $571 million. So it's not that much, but it is in the right direction. It shows interest in the space, and that is massive. So it's a small start, but it is a start, is the big thing here. It's not something that you can just look at and say, it's not a lot of money, doesn't matter. It's the first time we're kind of going towards this direction. So it is a good thing, even though it's not a lot of money. And going on to say more likely stock prices move reflect investor optimism that GE's DOE contract are the start of something bigger. Like we've been saying, it's the start that matters insane amounts right now. It's the start of something, not the price that really is the matter right now. And if you look at GE's press release, talks about its immediate goal with these projects is to prove that burning hydrogen can create a substantial increase in power plant efficiency over gas turbines that burn natural gas. And the ultimate goal is to accelerate the path towards 100% hydrogen combustion future. And we know companies like Bloom and Plug, whose core business is running hydrogen through fuel cells to generate electricity rather than burning the stuff. But they do hold potential to create a secondary use, new source of demand for the hydrogen gas that these two companies have both said they want to produce. So that's a big thing too. Plug, we know, is building out the infrastructure to produce hydrogen and be a supplier of hydrogen. And I think that's where their big money maker and big business is going to be, is the amount of hydrogen they can produce and supply and sell. Just like the big oil companies producing, gas and different oils, we are going to have Plug producing hydrogen and being able to sell that to power plants or whoever needs them. And it's going to be less about the fuel cell in general. And obviously with something like this, we see that obviously a secondary use, more demand means more money for the companies, which means that 2024 date that is so massively important of being profitable by the year 2024 is more in sight now, seeing that we could be seeing demand flowing in from much more places, which obviously is more business for all of these companies altogether. And if we look at Plug on its price chart, we see that it's in a good spot. We know that we want to be within this range of just under $14 to about $19 with the market in the way that it is. And seeing how, the conditions are not good. We're seeing massive shifts in the market all the time. The Snapchat news that came out was drastically bad and maybe could have been a capitulation moment for the entire market. And just maybe we found a bottom. But looking at Plug, we could have found a bottom as well here just because we went to this $12.70 mark and have been up since then. So not to say it can't go back down or break that, but maybe we found this bottom and maybe Plug bottomed and now we're kind of in this way that we're rising up. The biggest thing to see for this price chart for everything is going to be to stay within these lines, because if we can break above it, that's A plus amazing type of stuff to happen. But if we break below this, it's going to be a bad time. We don't want to see that. So if the market continues to be in a bad spot or doesn't get better, staying within this range, I think is insanely good, and will just be like proving that Plug could have found support and a bottom and could gear up for a move up as market conditions get better. Obviously, we want the price to go up and stuff, but we ultimately, during these times, don't want the price to super collapse. So sitting at $17, $17.06, it's at $17 after hours actually, but a massive move up, 8% on the day on this news. The entire market had a very good day, so this could have accelerated these gains being that much better. But ultimately, this is good news for Plug. Good news for hydrogen space, good news for everything involved, and the growth of the company continues to look better. The fundamentals continue to grow out, the infrastructure they're building continues to grow out as well, and then the ability for them to produce hydrogen and supply it and sell it everywhere is just getting better with this GE contract and exploring hydrogen. So just everything looks pretty good right now. And we have an analyst too talking about Plug Power. This analyst is actually insanely. We'll start down here. That Dial is ranked at number 28 out of nearly 8,000 analysts in the Tip Ranks database. The analyst ratings have been correct 44% of the time, with an average return of 49.8% per rating. So that's a pretty good track record. It's not amazing, like 44% isn't even the majority, but it's not bad. So a lot of people are wrong way more than they could even dream of being 44%. And with this guy being one of the top rated guys, he has talking about Plug, saying that the decline in Plug Power shares could be a blessing in disguise. Analysts see the company's business improving in the coming years and the stock rising as well. He has the stock rated a buy with a price target of $78. So that's good. He is bullish on the stock, thinks that, the price being as low as it is today could be a blessing in disguise, because you can load up on more shares because of the overall market sentiment in a bad spot, forcing these companies down here. And some of the companies that are down here don't deserve to be down here. Plug could be one of those companies where it is down here because of market sentiment and where the market is, not because of where Plug is and how it's doing with its business. So we will see. Obviously, the future will tell everything. But right now, it seems hydrogen is moving in the direction of adoption. People are looking into how to do it. And then while that's happening, Plug is building out their infrastructure to supply hydrogen, produce hydrogen, and be that main kind of company in this business that just has the majority of the market share. So it is a good thing. And then he goes on to say, we believe the stock should get a better appreciation from the market on evidence of execution against margin improvements and global growth. Big things, continuing to grow. Global growth is important too. It's not only growing in the US, they have plants in Europe, they have plants all over the world, and they are continuing to outpace or grow very well in the entirety of the world. And that's going to help them scale. It's going to help them make more money. That's going to help them be the market provider and the market dominator in hydrogen, where they will be the person supplying hydrogen to everyone who needs it. That could be power plants, that could be cars, fueling stations, if they go to hydrogen cars. It has so many more outcomes than just being a fuel cell in a car or a fuel cell in a forklift or fuel cells in general. It can be literal power plants generating electricity with hydrogen. So there's just a lot more to what Plug can do than I think people might be looking at them for right now. So Plug looks to be in a pretty good spot right now. They're growing. Their fundamentals are moving in the right direction. Hydrogen adoption is happening and moving in the right direction. A lot of things are just going right for the company, and right now it could be so battered down because of the overall stock market and have nothing to do with Plug itself. So could be a good time and a lot of opportunity in Plug Power. That's gonna do it for this video, guys. As always, don't forget to smash the like button and subscribe on the road to 1,000 subscribers. And I'll see you guys in my next video.